Dear clients, welcome to Phillip Securities Research Weekly Market Update. Equity markets are looking a little tired from a technical point of view regarding this short-term rally, but we think upside risk continues to present itself as investors anticipate the ECB to intervene in secondary debt markets of Spain and Italy. At the same time, latest US non-farm payrolls was better than expected, so this has lent some hope to the market. But we would remain sellers into this rally, as the underlying vector of the global economy is still slower. Export data out of Asia is weak, as is data out of Europe. Income improvements in the US have largely been due to inflation coming off in line with weaker global demand, while the nominal rate continues to be much less inspiring. With the drought in the US and quantitative easing anticipation boosting crude and agricultural prices, we could see incomes drop again in real terms. Industrial commodities also refuse to rally according to the overall commodity complex, indicating that the underlying demand is still weak. Short-term risk on aside, our medium-longer-term portfolio stance is unchanged. We think absolute returns for stocks till the first quarter of next year could prove fleeting, but we favor ASEAN markets, Malaysia, Indonesia, Thailand, and Philippines, and Singapore, to be relatively more resilient. For the first four, domestic demand and pro-growth government policy counteracts a weak external environment. As for the STI, about 60% plus of earnings comes from ASEAN and the emerging markets. In addition, average dividend yields are higher than most other indices, which along with the Sing dollar's relative safe haven status makes it an attractive buy in these yield-starved times. Overall, we favor fixed income over stocks, given our global slowdown, receding inflation outlook. A repressed rate environment is inducing a global search for yield belong the traditional safe havens of treasuries, bonds, gilts, and Singapore government securities. Portfolios hard-pressed for yield will likely have to explore beyond these safe havens, thus we like dollar-denominated EM sovereigns, dollar-denominated Asian sovereigns and corporates, and US corporate debt. Dividend stocks are also likely to be a spillover beneficiary. Our Singapore sector strategist likes Singtel, Sembcorp Industries, and Comfort Delgro. He is also overweight aviation services, ST Engineering, SIA Engineering, and SATS, and also the REITs. Thank you for watching, and tune in next week to Phillip Securities Research Weekly Market Watch.